The Hedgeless Horseman here. It's February the 15th, 2023. This will be a video about the news out of FireFox Gold, and also just to reiterate some common sense stuff. What makes this sector quote hard is also the reason why it is easy, like Pierre Lasson talked about in the last video I did. First of all, FireFox Gold drills more shallow high-grade gold at Mustajärvi East target in Finland, including 13.05 meters at 15.04 grams per ton gold and 12.44 meters at 14.34 grams per ton gold. I mean, obviously superb results. High-grade, kind of bonanza-grade gold over wide widths. And sure, is some, I haven't done the numbers, what the, let's say, residual grade is, but you can see here it's like, yeah, still 1.2 meters at 35, obviously super high grade, 1.8 meters of 53, including 0.8 meters of 100 grams per ton. I mean, this would obviously be extremely economic probably to mine, and 1 meters of almost 40 grams per ton. And within the same hole there's also a 3.4 meter interval of almost 51 grams per ton, including 1 meter of 170 grams per ton. That is pretty outstanding. Hole 25, 12 meters at 14.34 grams per ton, including 1 meter of almost 65 grams per ton, 2 meters of almost 50 grams per ton, and there's also 1 meters of 14.53 grams per ton deeper down. And even deeper down than that, there's also 1.2 meters of 8.75 grams per ton. That is kinda exciting to see this many different high-grade to bonanza intercepts. Like there are multiple gold-bearing loads. And here you can see the location map over ground magnetics. I do not know, exactly what the magnetics are telling us in this instance. But I guess, it tells them something at least. And here you can see the directions that this east target here is open, because we know they've already hit at a bunch of other places. This is also with the surface projection and magnetics. So here's the east target, northeast target, central zone. Here you see the scale bar. So there's obviously something going on here, because they've hit high grade gold on strike. That's got to be what, like from here to here. That's probably almost, between 1.5 to 2 kilometers, I would guess. Somewhere along those lines. So this is, this looks like a major target, obviously, and you don't find, holes like this every day. And there's a bunch of cross sections. And here's the full rundown of hits in all three holes. Hole 26 didn't hit, it hit gold, but not high grade. But you can see the grade thickness, the gram meters here, almost 400, 232. A 40 gram meter hole is good. This is like 10 times better than good. And this is a few, several times better than good. And they obviously have, this is from the Mustajärvi property, which is right next to the B2 Gold's tenements here, or I think they are the majority owner or earning. Majority owner already, I think, given their deal with Orion Resources. FireFox, obviously, unlike, I guess, most juniors here, FireFox still has 100% ownership of all their tenements in this central Lapland gold belt, which is, becoming quite hot with Orion / B2s drilling here at Ikkari West, and here we have the multi-million ounce Ikkari deposit. FireFox has land here, obviously here, which is surrounded by Risti and Launi, and again this recent news was from the Mustajärvi project. So obviously FireFox is one of the largest landowners here, owns it 100%, unlike most. In a hot area that's getting hotter because the more these companies drill, the more they are finding, obviously. I mean, Orion is putting out news quite often. Rupert is a monster, and Mustajärvi seems to be this eastern part at least. I mean, and they're obviously still very shallow yet. There's a lot of room to grow here, obviously, and who knows, maybe there are some let's say high grade shoots. I mean, we certainly don't know how this is gonna play out, but it's like you don't get gold hits like this all that often, and this belt has already proven that. I guess one should call the Ikkari deposit a monster. I mean, I think it's around 5 million ounces of high grade gold or something, and B2 is working with Orion, obviously. So I expect it. I mean, this looks like a new gold camp in the making, and FireFox was early in, staked a bunch of ground, still keeping it 100%. So in terms of beta to this overall land play here, I guess it's pretty safe to say that FireFox has the highest torque. And what's interesting, like today, I mean, FireFox at 11 cent. I don't think. Yeah, okay. Price is unchanged. Only a 15 million Canadian market cap for this and all of this. Is that expensive? No, I don't think so. It's like super cheap, just based on the potential and the fact that, I mean, it's getting better. There's no guarantee that Mustajärvi will become a, let's say a few million ounces of very high grade gold, which could theoretically be worth hundreds of millions. There's no guarantee, but there's certainly a chance of something like that happening. So when you think about it, it's like 15 million for Mustajärvi plus all the other targets and the entire land package, which is, how big is this land package? I don't know if it says, and yeah, here you can see basically FireFox cheapest one here, and sure, Orion is a bit more de-risked. I guess it has few times the market cap, and obviously B2 is earning in. So I would say it's a safer bet, but FireFox here you have the torque, let's say, because seriously, I mean, if Mustajärvi or some other target here becomes a major discovery, this obviously is going to look very cheap, and it's like people point out here, Bono, you can complain about 100 gram meters, that's what everyone is looking for, yet sentiment so ugly that nobody cares. And that's obviously why we get typically quite frustrated in a time like this, because okay, and I've talked about this a bunch of times before, like it is rigged against you at sentiment lows, because you take on risk without immediate reward in case things go well. So I mean, what if all holes had missed? What if they didn't hit? I mean, if quote the best case scenario is like, oh, they hit some remarkable holes at Mustajärvi, and you get no reward. Of course, the thing about markets is that since it's sentiment driven, the reward is delayed one could put it like that. When you buy something cheap, the reward is delayed. You don't know when price will get closer to fair value, but that is when you actually do the harvesting. You don't know when it's the harvest is in, because now we can't even harvest any gains by being a pre-existent holder. Great results are out. We're thinking, okay, I took on risk. I'm owning this company. They drilled. They took risk drilling, and they hit something really good. So where is my reward? It's not here yet. Oh, obviously. So that's the thing. That's what makes people frustrated with this market, this sector, and also why it's so easy on this. On the other hand, because yes, as a pre-existing shareholder, it's frustrating to be a holder and take on risk with no reward. But at the same time, buying becomes incredibly easy, because you can buy a lot of stuff after they have gone up in value but not in price yet. It's again, like I talked about a few videos ago, it's like investing with insider knowledge. Because if you are an insider and you would buy on information that the market doesn't yet know about, and you know it's good, let's say, so you can buy before the price has reflected the new reality. In this case, there is a new reality, but price hasn't changed. So it's basically the same thing. There's no difference. If the price is unchanged, there's no difference at face value from someone buying with the knowledge yesterday and buying today, because the price is the same, and now everyone has the information. So I mean, why is this sector hard? I mean, it's really not that hard once you just understands that what is priced in today might not get priced in tomorrow, especially if it's we're in a hot sentiment environment, and what is not priced in today will get priced in at some point in time, or typically. It's like my example here was as they say here, exactly where discouraging and depressing seems like all the action and who plays with lithium juniors. Yes, lithium is really hot now. But first of all, I made a point. We can buy success without taking price risk in this sector now. It's like being an insider, which I just talked about. We won't complain when all the value we have, quote, stolen starts to get price in. And the thing is, yes, everybody's looking at lithium right now. And it's like, oh, lithium sector is hot. Oh, lithium sector works. As soon as a junior stakes a lithium project, they can go up like 40-50%. That's true. Just staking, there's nobody out there there's no lithium juniors that simply stake a gold project and they say 50% revaluation. I mean, it speaks to just how hot the lithium sector is right now, for example. Just mentioning lithium and you get buyers. They don't care about the value. They don't care about the risk. They don't care about anything except they believe they've seen lithium juniors go up. So they buy because everybody buys and sells based on if they think it's going to go up tomorrow or in the short term, or and sell if they think it's going to go down tomorrow. That's everyone's focus. 95% of people, that's all they're focusing on. So you can see how absurdly different. I mean, imagine if this was a great lithium hit. I don't know what this would be equivalent, lithium equivalent, but let's say this was a barn burner lithium hit. Do you think FireFox Gold would be unchanged today? No. Why? Because sentiment is different. People have more positive emotions with lithium because they've seen people make money on lithium. They are seeing people make money on lithium. They are seeing success get rewarded. They see even the mentioning of lithium gets rewarded. And it's like my point here, it's like, yes, we can look at lithium now and it's like, oh, lithium works, I should be in lithium, etc. I mean, that's typically, I see a bunch of people getting into lithium now. Why? Because again, they've seen, hey, if companies provide good news there, if you take risk, it will get rewarded. Unlike the gold space right now, and silver space, and even copper space, etc. Sure, that is true. But in lithium, you can buy typically banked success for like 70% discount. There are juniors out there without a drill hole that are trading at 10 times of what FireFox gold is. Why? Because they're in lithium. Sure, it's a, I know one. It's a great story, good value, risk-adjusted value proposition, let's say. But it's highly speculative because they haven't really found anything yet. But 10 times higher market cap. So the key point is, yes, good news is rewarded right now if you take risk in the lithium space. But there are not too many cheap stocks in the lithium space where the risks are to the upside. No, the risks or risk get rewarded because people want to buy lithium. Sentiment is high. People feel good about lithium. They don't feel good about gold and gold juniors. They don't feel good about silver and silver juniors or copper and copper juniors, really. But that will change. Lithium sector will not be hot forever. That sector will someday go to what we're seeing in the gold space. Good news not getting rewarded. And you could actually buy banked success on the cheap. So in lithium, we're at a sentiment level akin to what the gold space was in like 2016 when gold went from $1,050 to $1,300. We went to a hot sentiment environment, especially for silver. But how do you make the big money? That's obviously front running a major shift. I'm not jumping into lithium miners or lithium juniors. I don't know if they're going to go up more. I just know that, well, first of all, I don't know too much about lithium. Second of all, I know sentiment is hot. It's not going to stay hot forever. But the gold and silver space, for example, is discouraging and depressing. And that's not going to last either. So how do I, if I know things will always change, would I rather buy something that's depressed, that's going to go to a hot sentiment environment, or would I rather buy something hot in a hot sentiment environment, which is going to eventually become a depressed sentiment environment? Obviously, if you're long, you'll make the money on going from depressed to hot. So, and on that note, again, people right now see lithium juniors working, and in hindsight, they're looking at, most people obviously missed the boat in lithium juniors, let's say. I mean, they weren't in around the bottom. It was like, yes, it's easy to look at lithium now and it's like, lithium space, I should have been in that one, and that would be so easy. But if you actually look at some lithium juniors, like this is Pilbara Minerals, for example. Now it is, I don't know how big the market cap is, but it's like obviously a major success story. But I remember in 2017 when Pilbara Minerals was hot. It had gone up, it had bottom and gone up 300%, let's say. Great, I mean a multi-bagger. What happened then? When sentiment and lithium price peaked in late 2017, Pilbara Minerals went down pretty much 90%. 90%. Over more than 2 years. Funny thing is, like in the gold space, on the other hand, it's more that we peaked around 2020 when lithium bottomed and went down from there. So we're kind of experiencing this thing here right now, and have experienced this in the gold and silver junior space. Nobody cared about lithium here. Nobody was buying. Nobody was talking about how much they made on lithium. You didn't see people throw around their favorite lithium picks when lithium juniors had crashed. Why? No, people saw examples of people losing money, quote, on paper in the lithium space. So nobody talked about lithium here. Nobody wanted to buy. And I bet at this point in time there was probably a lot of banked success that you could buy for like 70% off or even more. Because the funny thing is that, again, it's like, yeah, lithium juniors are up here now. Here the sentiment was extremely depressed. Just about 3 years ago, lithium sentiment was extremely depressed. What happened? Things changed. Prices went up. Sentiment got hot. It wasn't hot immediately. Now it's really hot. Why? Because the trend has gone on for so long. For 3 years. Why is the sentiment so poor in gold and silver? Because the trend has gone down and gone on for like over 2 years. The longer the trend, the worse people feel. And the lower it goes, the worse people feel. You will always have the best bargains, obviously by definition, at the end of a downtrend. They get extreme near the ends. And I think in the junior space, for example, gold, silver juniors, yes, I think we're off the bottom. We're off the bottom. But it's like we might be here or something like that, I think. Nobody cares yet. But again, the people who made a lot of money in lithium are not the ones that bought in the last year or so. I mean, they made some money and some have done very well. But it's like, no, the people who literally, killed the market or made superb returns in the lithium space were the ones who started off buying when no good news was rewarded. When the sector the market felt rigged against them. No matter if their favorite lithium junior put out good results or de-risked their project, it did not see any buying. It just went lower and lower and lower and lower. Until that suddenly stopped. The last dumb seller was out, and then this stock, for example, after going down 90%, it went up 4,347%. All you had to do was wait 3 years. And you would have 40 bagged your portfolio or your holding. And you obviously didn't even need to be in at the bottom. From this level, that's still a 10 bagger. From this level, 8 bagger. So again, it's like the same reason why it's cheap and everybody's frustrated right now is absolutely the same reason why you can make a lot of money in the mining space. It's just that almost nobody is able to buy crashes. Low sentiment environment. Most people are not in gold and silver juniors right now. They don't see any reason to buy them because they don't see any evidence of them going up. They are buying lithium juniors up here. They were buying lithium juniors up here. They were not buying here. And like I said, we're down here in the gold silver space. Sure, it's not as low as it was recently, but we're certain lithium is probably around here. I'm not saying lithium can't go higher or anything like that. I mean, like we saw here. I'm just saying that the big change in lithium sentiment is for it to get worse, not better. Because like here, okay, yeah, juniors hit, or Bear Creek Mining hit this level, still went up 161%. That is not a small return. After that, it went down 96%. Right now, in this gold and silver space, you can buy success without taking any risk. It's like being an insider. It's literally like being an insider. You see the results, you see the positive results, you don't even have to pay up. So as a buyer or a value shuffler, this is the greatest time ever to be in gold and silver miners. We can just pick and choose. Like, okay, that company went up, 50% in value. Price didn't change. I'll sell some of my other cheap juniors, buy the ones that got even cheaper. So I sold something that I think is, 150% undervalued and bought the one that I think is 200% undervalued. The only thing left to do then is to wait from sentiment to go from absolutely atrocious to positive. Crash, rally, crash, rally, crash, rally, crash, rally, crash, rally. Crash, rally, crash, rally, crash, rally, crash, rally, crash. This is not hard. You cannot say that this sector is hard if you can buy something cheap. If you can buy stuff for 70% off, it's not a hard sector. You make it hard because you don't have the patience. That's the only reason. It's like this is one of the hodl portfolios. Lately it's been very weighted and is still very weighted towards Magna, which has, done well lately. But that's like, I don't know, maybe 20 stocks or something. It's a hodl portfolio. I haven't, in this one, I think I, had a 1% turnover or something in the last 2 weeks. Almost don't do anything. And I think Magna, 200% undervalued. Snowline Gold, probably I'm getting inclined to add. I actually think I added some today. I would like Snowline to get even cheaper. IA Gold, cheap. Goliath Resources, cheap. Western Alaska, on a risk-adjusted basis, yes, I think it's cheap. I think it's one of the best exploration stores. Tectonic Metals, more of a high-risk, high-reward play, actually. But I think it's cheap. I mean, Tectonic Metals, I mean, that has, 10, 20, 30 bagger potential, I would say. Is there a guarantee? Nope. But the chance of success that's priced in of that happening is like so low that even with, if I have a small position, let's say in Tectonic, 3%, maybe it gets cut in half. Okay, who cares? 1.5% minus. If this turns out to, I mean, they drill and they hit and they drill and they hit, and maybe in 2-3 years this has gone up 10 to 20 times. It would pay for a bunch of others. But it's always, I own stuff that I think is cheap now and or will be a lot cheaper within the next 1, 2, 3 years. And by that point, I think we will also hit the sentiment high. It's like in Pilbara Minerals. I don't remember how this case was, but I think they were pretty de-risked here already. I mean, I think they already had a resource back here. So my guess is that down here, when nobody wanted to even touch a lithium junior, my guess is that it was extremely cheap based on what is already there. It's like, yeah, it's obvious that this company should probably be worth something around here at least. I don't know. But like, yeah, you bought success, what they've already proven up. You could buy what they already have for like 70% discount. And you might think that, hey, they have growth as well. So not only do I think there's a, let's say 200% to fair value from here. So it's like if they don't go bankrupt, it's more of a when or if I'm going to net 200%. But they also have a growth profile. That's why I've talked about, I mean, my favorite place is like if you can buy something here that is really worth this much and is expected to grow over the next 2 years. So when we get to a sentiment environment that is this hot, this stock might be up, I don't know, a lot, let's say. Because, okay, you expect to get 200% just based on what they have, and maybe they will add 100% in growth. Maybe they'll double their growth value. So if you buy something for 50 million that's worth 150 million today, and you think it's going to be worth 300 million in 2 years, let's say, your expected returns are 300 minus 50, 250 million. which is 5 times. Okay? That's a very good expected return. Very good expected return. That is why I don't see any point in selling or trading, because the risks are to the upside. I think all of these companies are cheap. I think they're going to be even cheaper because they are all growing or have a chance to grow considerably. It's like Lure Resources. They're cheap. Might find another big discovery. Great, that would be superb. It's like we'll go from already very cheap to finding another one that's not even priced in. Montage Gold cheap, Pacific Ridge cheap. And yes, they don't have a resource. It's like, yeah, but if they end up making a proving that, Clayule, for example, is a legit, could be a legit porphyry mine, copper gold porphyry mine. Hey, I mean, I don't know what's the valuation right now. 24 million. I think they have like 7 million in cash. Enterprise value, let's say 17 million. Is that pricing in any sort of a mine? No. Dolly Warden Silver. They have bank success. They have tens of millions of ounces of silver and over, I think around over 1 million ounces of gold. And it's still growing. There are four deposits to step out from. And they have a lot of cash. So that's gonna be even more valuable in the next year. And even more valuable in 2 years. So the risks are chronically to the upside as soon as you buy something that's undervalued. And if it has growth potential, chances are it's going to be even more cheaper. So I mean, our job is obviously to front run, like in lithium. The ones who bought here front ran the fact that sentiment will change. And it did, and they made a ton of money. People who are getting in now because, hey, I mean, it's no point being in gold and silver juniors because that sector don't work. You don't get rewarded there. Meaning everything is dirt cheap there. Risk reward is incredibly good, but they rather buy the sector where they might be buying something that is overvalued. Because they have seen this. And they think this is going to continue forever. And that's the same reason why they sell here, because they think it's going to continue down forever. Even though it's like dirt cheap here, probably dirt cheap here already. It's like, seriously, like, how on earth do you not beat this sector? It's so easy. You don't need to be a rocket scientist to see something that is undervalued in the gold, silver, and copper space right now. So if it's not undervalued, or if it's not overvalued, if it is significantly undervalued, your job is done. I'm going to buy this that is really cheap because I know it will not stay cheap forever, because this sector never stays extremely expensive or extremely cheap forever. It goes up and down between them. I don't want to bet on, it's not my cup of tea to buy something, let's say, that's fair valued in the lithium space, or maybe overvalued, because I hope that it can get even more overvalued. That is not a value investing approach. A value investing approach is buy as much as possible the cheaper something gets. And just wait. That's the only thing you can do after that is wait. It might take 1 year, 2 years, 3 years. I don't know. But if you own something that's 200% away from fair value, your expected return is 200%. And if we assume that sentiment will change within at least 1, 2, 3 years, a 200% return within 1, 2, 3 years is a absolutely great return. If you find something that is also, could grow a lot, maybe that 200% return is in reality more like 400 or 500%, 600% return perhaps within 1, 2, 3 years. Absolute mind-numbing results. Obviously, you don't need a 100% hit rate in that case, because just if you have 30% hit rate, that's enough. That's enough. And only the best thing you can buy is just the cheaper something gets, the more you buy. I mean, I love this environment. I mean, it's almost impossible for me to be making a mistake. I see it as impossible that Magna Mining is not undervalued right now. I see it as impossible that all the others here are not undervalued right now. So I know I'm beating the market because I actually can see that they are undervalued, and I can hold them until they are not undervalued anymore. If all these were overvalued, I would be making a mistake. The only reason you sell anything is if it's overvalued or you find something cheaper. Yeah, I mean, I love this sector. I put in more money, and again, even though yes, it's been, believe me, it's frustrating, but I know that the eventual harvest will be even larger the longer this sector stays cheap. The longer you see stuff like FireFox Gold and a bunch of other juniors, they put out great news. Price doesn't change. So the opportunity just got better. In the lithium sector, you might see some good, maybe it was at fair value already. Some good news was put out. Maybe the value increased by 10%. Maybe the stock is up 30%. That's not a great opportunity. That's an opportunity to sell. Time is not on your side in those cases. If you own something that's fairly valued or overvalued, time is not your friend. You can't sit and wait for better returns, because eventually, as long as you buy something overvalued, the risks are chronically to the downside. It's just a matter of when, not if. If you buy something cheap, the chronic risk is to the upside. It's a when, not if situation. And again, if you don't know when that is going to happen, but you also have a growth profile, you get paid to wait. Let's say a stock doesn't go anywhere for 6 months, but value goes up 100%. Yes, at surface it's like, why was I in this stock? I mean, hey, it's gone nowhere. I haven't been rewarded yet. But then all of a sudden the market comes alive again, and that additional 100% value created gets priced in. So all of a sudden you get rewarded. Maybe it takes 8 months. Who knows? But it's like again, it's like this sector is so easy when you just understand that. But everybody else. Almost everybody that's selling or buying your shares, they are their strategy is to just buy something they will think go up tomorrow. They have no problem buying something that might be nosebleed overvalued as long as they think it's going to continue higher the next day. And they end up always losing money. Because they sell. The stronger the downtrend, they sell. They're much more likely to sell here than here, because now this looks even worse. And as you see, people are much more likely to buy lithium juniors now, because this trend has been so long, so strong. And here nobody, the ones buying lithium now, they wouldn't touch lithium here. The ones who did the exact opposite didn't try. I mean, the worse this short looked, basically, the more money you ended up making. So I dare you. It's like, explain to me how you lose money in this sector if you have some sense of like, okay, what is a above average junior? It's like I just made a list just looking at some juniors with high insider holdings. I mean, typically these people will be working a lot. I mean, if you are looking at your portfolio every day, that's not work. These people with high skin in the game, I mean, that's all. They wake up every day, these management teams and insiders, and they think, how can I create value? Because they get more out of a rising stock price than a salary. typically. I mean, Western Alaska has like, I mean, tens of millions skin in the game for the people involved. I mean, that's way more than their salaries. So they're gonna be, their focus is gonna be create value for shareholders. Every day they wake up, they go to work, probably work weekends as well, just thinking about how can I create more value in this stock, how can I create more value in this stock, and then they go out and do it every day. Paid to wait. If you think, hey, I haven't watched the stocks or market today, it's like, if you own some of the better companies out there with high skin in the game, you don't need to be working. You don't need to look at the share price. All you need to know is like, okay, is this still cheap? If so, yes, then I'll continue to hold it because I know these people, even if I'm in a vacation in the Bahamas, they will be working every single day, probably weekends as well. While you do absolutely nothing because you already have a direct ownership, you own portions of what they already have, and you own a percentage of the all labor and value creation that's going to take place. I mean, it's just incredible. I could have not gone up out of bed this morning, and still these companies would be creating value today. They would be working for my benefit. I have a direct stake in their labor, without having to do anything but hold their stock. And obviously, it's like long runways, for example. If there's a 3-year growth profile for a stock, and great management, etc., obviously, the longer you hold the stock, the more you would expect to make. I mean, I see a bunch of short-term traders all the time. It's like, let's say you have a fantastic, undervalued, cheap growth stock, and people trade that. It's like missing the whole point. And obviously, it's like, okay, since a 10-bagger typically takes 3 to 5 years, perhaps. The longer you hold the stock, if you bought it. Well, let's say you bought it here. It was cheap to begin with, had a growth profile for like 3 years at least. The longer you hold the stock, obviously the more you expect to make. So if you held a stock for, I don't know, let's say, 2 months, maybe this amount of value would have been created. And you should expect to get this return. The longer you hold it, the more you expect to make. By definition, I mean, it's really that simple. Buy something cheap that's gonna grow. If that case plays out, I can guarantee you would be up a lot more if you hold it for 2 years than if you sold it a year from now. Because more value will have been created. So it's really again a game of common sense and patience. Who can sit still and do nothing as long as a case is intact the longest? Those are the ones who will make the most. And you can see this like in Pilbara Minerals as well. Let's say you bought something that was super cheap here, and you were able to hold it for March 2 months. After the bottom was in, you'd made 85% return. Great. The ones who were able to just sit and let the case play out and let the growth play out, the longer they held it, the more they made. The longer they held it, the more they made. But most people, obviously, it's like they jump in here, sell out there, jump in here again, sell out, who knows, here maybe. And at the end of the day, they probably will have lost money or made a bit on some trading position. Meanwhile, it's like, okay, I'm getting in big here because it's so cheap. and have a long growth profile. Case is intact. Okay, I'll hodl. Okay, I'll hodl. Case is intact. Case is intact. Case is intact. Maybe they get out, I don't know, here or something, or here. It's like, yeah, okay, now I think sentiment is rather frothy. So if they had any kind of, meaningful position here, they would be up, 36 times. Whereas somebody who tried to short-term trade let's face it, like, okay, you see this rally, I'm gonna sell out, okay, or you don't sell out, but you sell out here, okay, then it starts going up again, okay, but you saw that it went down after it went up like this, okay, so maybe you sell here, whatever, you think it's gonna retrace as much as it did here, so you don't buy here, then it starts to go up again, but you're not sure because, okay, it's probably gonna go down. It doesn't go down. But you don't want to buy something going vertical like this because you've seen this correction here. And that correction alone was worth this was a 36% washout. You don't want to be a part of that, so you're not buying this when it goes vertical again. But then it just keeps on going. And, then you can't really, or maybe you think, hey, I look at TA, it's probably gonna stop here, whatever. So you don't buy, but sooner or later you throw in the towel. Even though now it might not even be cheap anymore. It was dirt cheap back here, probably cheap still here, cheaper still here. Now it's not even really cheap anymore, but you can't take it, so you get in. Then you have a correction. And then you're like, foolish again. It's like, yeah, I knew this was going to happen. So you walk away, and then you see this kind of, it starts to go up, but I don't trust it yet. I mean, you can see how a trader would like, how 95% of people don't end up making any money. Because they don't care. They don't play the risk reward. They just buy things when they think it's going to go up tomorrow. And sell if they think it's going to go down tomorrow. They don't look at price. They don't look at value. They don't look at news releases and think, hey, the value went up like 20% and still price isn't changed, so I should buy more. No. They don't buy because it didn't go up. They sell because it hasn't gone up. They sell down here because they don't see any evidence of it ever being able to go up. Yeah, most people will never make any money in this sector, or any sector, especially not a volatile sector. But I dare you to tell me how it's so hard to beat this sector if you just have infinite patience. How on earth am I expected to lose? I can't see how I'm expected to lose in this sector. All I have to do is literally do nothing but buy cheap and wait. And, have some, stock picking, have some common sense. I mean, again, it's like, okay, here you have, here you have a bunch of high insiders, like great cases as well. It's like, how on earth, if I know these are cheap now, how on earth am I making a mistake? Are these going to be less valued in 2 years? Is every story here gonna stop growing tomorrow? Even some who if they would stop growing would still be cheap today, but they're probably not gonna stop growing. It's just absurd how good the risk reward is at times like this. It's just absurd that anybody who had that kind of common sense and understood the lithium sector, they would be scaling out now, I guess. They would be buying here. So again, this is late 2020. Okay, lithium sector, let's say, assuming this is a good proxy, bottomed in, let's say, March of 2020. Let's look at gold and silver. Okay, well, okay, this was the, I get it, this was the flash crash. Still, okay, after the flash crash, we peaked in 2020. We peaked in August 2020. August 2020. That was here. This was kind of, the base. I mean, this looks like some kind of head and shoulders, whatever. So lithium was still just off the base. So it was more the beginning of an uptrend, whereas in the gold space, we were at the end of an uptrend. And now I think lithium is closer to this kind of environment, and obviously gold and silver juniors are down here. So from my perspective, I don't know where lithium is going to go. I just know that there's probably not any dirt cheap lithium juniors out there. I mean, even if you take Patriot battery metals or whatever, I mean, they appear to have a world-class deposit, etc. Still, do I think that's easily 200% undervalued? No, I don't think so. I don't think so. So I just simply think the risk reward is a lot better in the gold, silver and copper space. That's why I don't really have many lithium holdings. I think I have 2 or something. Anyway, a big rant, but it's like, again, it's like you have to remind yourself of this all the time. The things you see working now that are hot and you want to get in, the big money was, the big money has been made. The big money is getting in when it's the polar opposite of working, like now in the gold and junior space, gold, silver, junior space. Not investing advice. I own shares of Pacific Ridge. I own shares of FireFox Gold. I own shares of Magna Mining, and any, most of or all of these companies. I think all of these companies, some are banner sponsors. Do your own due diligence, make up your own opinion. I don't share your profits or your losses. Again, think for yourself. It's you who are stuck with your portfolio. And juniors are risky. It's like not every junior is going to play out well. And we have no idea when they're going to play out. We have no idea when sentiment is going to play out. We can just stack the odds incredibly in our favor. And I would say the odds are more stacked in the gold junior and copper space than in the lithium space, because lithium is up here. Gold and silver juniors are down here. Anyway, thanks for listening. Bye.